we are going to talk about trend direction, and we are going to discuss important patterns in technical analysis. All right, wonderful. So we will start with the session two, and so we're going to talk about trend direction, and it's a very important aspect, and it makes trading easier as well, because by just simply understanding the trend direction, we get to know whether our trades are placed well or not. So from this particular chart, we can clearly see that the trend is going up. So if you just see here, so this was a downtrend, okay, and then after this correction, we can see that the trend is now clearly going up, okay, and after a point, a resistance is created, and the price is not going above this particular level, and we call this as a sideways movement, okay. So there are three types of trends. One is uptrend, okay, which basically signifies gain in capital. Then we have downtrend, which signifies give you some loss in your capital, okay. And there is a sideways trend, so which basically is a dead money. Your money is not either going or it's not decreasing as well. So we should always be, as a bulls, we should be always in uptrend, okay. If we are turning bearish, we should be in downtrend. So these are two trends where exactly the money is made. We know that everybody makes money in bull market. That is the reason everybody knows how to buy and sell. But maybe 30% or 20%, they know how to short, and they know how to make use of down trade, and they can still make money in down trade. In sideways markets, it's very difficult to make money. So even if you see the current Nifty, which has been going sideways and slightly declining from past couple of weeks, so it has become very difficult to make money in the sideways market, okay. In certain stocks, there is a clear downtrend, okay, and you can short, you can make some quick money in those particular scripts. But there is a clear when there is a clear cut uptrend, everything is moving up, it's fairly easy to make money, and we should be ideally part of this uptrends, okay. And the large sums of money is made either in bull market or bearish market. In bull markets, it's fairly easy because maximum market will have maximum participants who will be pushing prices up and up. Whereas when sideways market, there will be confusion, there would be less confidence, and people will tend to lose small amount of money, or they'll just gain very marginal money. However, in down trade, there is clear absence of buying, but bears will take advantage of down trade by shorting stocks more and more and bringing down the prices in a very short period of time. So another important aspect which traders miss out usually is the trend steps, okay. Now we know that the markets are going up, okay, but is it that all stocks are going in the same speed, or the steps that they're taking are fairly important when we talk about trends, okay. So all three lines, you can see that the stock is in uptrend, okay, or it's a clear cut uptrend moment. But there is a subtle difference over here. So if you notice here, there was a buying, okay, and resistance was created here. Then there was selling, support got created over here. Now, when the next time the stock is going to make up move, it has to cross this price point. Okay, so it has this additional resistance over here. Okay, so here it could be a fresh selling, and the prices might start to fall. Okay, but it has, let's say it goes up, okay, a fresh resistance is created. Now when the stock is going to decline, it will have this as a support level, okay. Now at this level, what is going to happen? Ideally it should have gone up like this, okay, but it has gone below this support level, so there's a fresh selling now. Now from here, it is again, it has to go above this resistance levels, okay. Now every time, you can see that this support level will come here again, a fresh support will come here. So every time we'll have some level of resistance for crossing these price points. So with every move we still carry a certain risk of going against our trend, and that is the reason the trend steps could be fairly long here. Okay, on the other hand, when your trend steps, so here what was happening, that stock was going up, it was coming down, then again going up, coming back again, something like this was going on. Then we have another setup wherein the stock spikes up. Okay, it consolidates, it's not going down. Okay, it consolidates, then it again goes up, consolidates, again goes up, consolidates, and so on. So here time frame would be almost similar. Okay, but your risk will be relatively less. Okay, because it is maintaining those certain supports and resistance level clearly. Okay, the best scenario would be something like this: when the trend steps are like this, it goes up, it consolidates in upward direction only. Okay, there is no strong movement, but it consolidates like this, then it again goes up, mildly consolidates, again gives a breakout. So you can see in terms of there is a strong price in the moment in upward direction, but but there is this time frame which is very less. Okay, so let's say here this particular trend is going to take let's say 3 months for these moments. Here it could take 2.5 months or 3 months, but in this particular trend setup it might complete the same task in let's say 1 month or 1.5 months. Okay, so we as a trader are usually miss out on opportunities like this. Okay, why? Because let's say you decide to enter into this trade somewhere here, on the next day or next couple of days the stock price shoots up like anything, and we think now the stock has already moved up by 20%, I shouldn't be entering at this particular point. Also, with these significant moves, your moving averages will be way below. So difference between current market price and your average price will be huge. Okay, so in case you're planning to buy somewhere here, so there would be a downside risk. Okay, because we know that when the stock prices are moving up and up, there would be some selling pressure or profit booking could come in, and which will eventually bring down the stock prices. Okay, so let's say you buy somewhere here, and let's say you make a handsome profit of let's say 5%. Okay, and there is a humongous selling pressure and stock falls by 20% in couple of days, so you'll be sitting on the losses of minus 15%. So when you have these kind of trend setups and you think that maybe I won't be getting any chance to enter into the script, so we have only two options. One is to buy gradually. Okay, so maybe you could buy in these steps. Let's say you buy 3 times, and again you buy 3 times on its correction. Okay, so your average price point would be something here. Okay, so we should not always hurry to buy into strong momentum stocks. Okay, we should always buy in steps. Okay, but again it depends, unless there is a very strong pattern which is being created, and these patterns we are going to discuss now. And that there's a very strong movement is going to come. Maybe in those cases only you can take the risk of buying at certain level, but you have to be sure that you'll exit with 2% or 3% losses max.